If you are 60 or older, own a home, and someone has recently told you that your social security card is about to become invalid, stop before you panic, pay anyone, or hand over your personal information. There is an important distinction you need to know. Your social security number and your physical social security card are not the same thing. And there is no general SSA rule saying that every senior's social security card suddenly becomes invalid next month. In fact, the Social Security Administration continues to provide replacement cards, and its own guidance says that in many situations, simply knowing your social security number is enough. You may not even need a replacement card. But there is another issue that could have a much more direct impact on your household budget: property taxes. If you're 60, 65, 70, 75, or older and you own your home, there may be exemptions, credits, freezes, deferrals, or other local programs that could reduce what you owe. The important word is may, because property tax relief is largely determined by your state, county, city, school district, income, age, disability status, homeownership status, and other eligibility rules. There is no single nationwide rule that makes every senior legally exempt from property tax. And that is exactly why you need to know what applies where you live. So in this video, we're going to separate the Social Security card warning from the property tax issue. Then walk through 8 specific things you should check before you send another property tax payment without asking whether you're receiving every benefit available to you. Let's start with the Social Security card, because this is where fear and misinformation can spread incredibly quickly. You may see a headline, receive a message, hear something from a friend, or even get a phone call claiming that your Social Security card will become invalid and that you must pay a fee, provide your Social Security number, or immediately purchase a replacement. Be extremely careful. The Social Security Administration's Office of the Inspector General issued a 2026 scam alert specifically warning that Social Security card services are free. The agency says people do not have to pay third-party websites for Social Security card services, and depending on the situation, replacement cards can be requested through official SSA channels. That means the first rule is simple: do not let a scary headline push you into an unnecessary purchase. If your card is lost, damaged, or you need a replacement because your name changed, use the official Social Security Administration process. SSA says that in most cases, knowing your Social Security number is enough, and if you do need a replacement, you can apply online or in person depending on your situation. The Social Security Administration also announced in 2026 that people needing an original or replacement card can start the process online and, when necessary, schedule an appointment to finish the process more efficiently. So why does this matter for a video about property taxes? Because seniors are increasingly being targeted by confusing financial messages that mix together Social Security, taxes, government benefits, and property records. A message might mention your Social Security number and then immediately ask for information about your home, your bank account, or your tax bill. Those are exactly the moments when you need to slow down. Don't click an unfamiliar link. Don't give your Social Security number to someone who unexpectedly calls you. Don't pay a company simply because it says your Social Security card is about to expire. Verify the information directly through an official government website or office. Now let's move to the part that could actually save you money: your property tax bill. The first potential savings opportunity is the basic homestead exemption or primary residence exemption. The exact name and rules depend on your state and local government, but this is one of the first questions every homeowner should ask. Is your home correctly classified as your primary residence? And have you filed for every basic homeowner exemption available to you? Some homeowners assume that because they have lived in the same house for 20 or 30 years, every possible exemption has automatically been applied. That assumption can be expensive. The correct approach is to look at your actual property tax record and verify what exemptions are currently listed. The second thing to check is a senior-specific exemption or additional exemption. Many states and local jurisdictions have programs specifically designed for older homeowners, but the age threshold isn't necessarily 60 everywhere. Some programs begin at 65. Others can have different thresholds or additional requirements. Income limits may apply. Ownership requirements may apply. Some programs may also distinguish between a reduction in assessed value and a reduction in the tax itself. So don't simply ask, do seniors get a property tax break? Ask a much more precise question: what property tax exemptions or reductions are available to homeowners my age in this county? And what are the income and application requirements? The third opportunity is an assessment freeze or valuation freeze. This is important because your property tax bill can be influenced by the assessed or taxable value assigned to your home. A program that limits how that value changes can potentially protect eligible homeowners from some future increases. But again, don't assume that every senior automatically gets a freeze. The rules can be very specific. Some programs are based on age, some on income, and some require you to apply by a particular deadline. Before you count on a freeze, ask your assessor exactly what is frozen: the market value, assessed value, taxable value, or the tax amount itself. Those are not interchangeable. The fourth thing to investigate is property tax deferral. This is very different from an exemption. An exemption can reduce the amount of property value or tax subject to taxation. A deferral generally means you're postponing payment rather than eliminating the underlying obligation. For a senior homeowner whose home is valuable but whose monthly cash flow is tight, that distinction can matter enormously. A deferral program may allow eligible homeowners to postpone some property taxes until a later event, subject to the program's terms, but deferred taxes can create a lien or otherwise become due later. So this isn't free money. Before enrolling, you need to understand the interest rate, repayment rules, effect on heirs, and what happens when the property is sold or transferred. The fifth opportunity is property tax credits or rebates. Depending on where you live, the relief may not appear as a simple exemption on your property assessment. Instead, your state or local government could offer a credit, rebate, refund, or similar program. This is why simply looking at the property tax bill may not tell you everything. You need to check the website of your state tax department, your county assessor, your county treasurer or tax collector, and your local government to see which programs actually apply to your address. The sixth thing to check is income-based senior relief. This is especially important if you're retired and your income has changed. Some programs aren't simply about being older. They may require you to fall below a particular household income threshold. The calculation may also specify which sources of income count: Social Security, pensions, withdrawals, investment income, and other sources can be treated according to the specific program's rules. Never assume that receiving Social Security automatically disqualifies you, or automatically qualifies you. Ask for the exact income definition used by the program. And here's another important point: your Social Security benefit and your property tax exemption are separate issues. Your Social Security card does not itself create a nationwide senior property tax exemption. Your Social Security number may be used as an identifying number when you complete government paperwork, but that doesn't mean your Social Security card is what determines your property tax status. The IRS also makes clear that real property taxes are generally state and local taxes, and federal rules concerning deductibility are separate from whether your state or county offers a senior exemption or other relief program. The seventh thing to investigate is whether you missed an application deadline or renewal requirement. This is where many homeowners get caught. A program can exist, and you can meet the basic age and income requirements, but you can still fail to receive the benefit because you didn't apply on time or didn't complete a required renewal. Some programs require annual applications, others may require periodic certification, some have strict filing dates, and some allow late applications only under limited circumstances. That's why you should never wait until the tax bill is due to investigate. If you think you qualify, ask now what the filing deadline is, whether you need to renew, and whether there is any possibility of correcting a missed filing. The eighth and final thing to check is whether your property tax record itself is correct. This sounds basic, but it can be incredibly important. Look at the property address, ownership information, homestead status, assessed value, exemptions, and any other classifications shown on your record. If something appears incorrect, contact the appropriate local office and ask how to challenge or correct it. Your property tax bill isn't just a number you have to pay. It's the result of a government assessment and a series of classifications, exemptions, rates, and local rules. Understanding what's actually on the record is the first step toward determining whether you're paying more than necessary. Now, let's talk about something else seniors should be aware of in 2026. There are also federal tax changes that can affect older taxpayers, but don't confuse those with a property tax exemption. The IRS says that for tax years 2025 through 2028, eligible taxpayers age 65 and older may qualify for an additional $6,000 federal deduction. with up to $12,000 available to a married couple when both spouses qualify. Subject to income phase-outs. That's a federal income tax deduction, not a blanket cancellation of your local property tax bill. This distinction matters because online videos and social media posts can sometimes combine several legitimate programs into one dramatic claim. A senior might hear new tax break, Social Security change, and property tax exemption in the same sentence and assume they're all part of one law. They aren't necessarily. Federal income tax deductions, Social Security rules, and state or local property tax programs are different systems. The safest strategy is to identify exactly which program you're being told about, who administers it, what form is required, and what the eligibility requirements are. So here's what I want you to do this week. Take out your latest property tax bill. If you have an online property tax account, open it, look for the assessed value, taxable value, exemptions, homestead status, and any senior classification. Then write down your age, your household income, whether the home is your primary residence, and whether you have any disability-related eligibility that might matter under your state's rules. You don't have to figure everything out by yourself. Your goal is to have the information ready when you contact the appropriate office. Then make one phone call. Call your county assessor, property appraiser, tax collector, or equivalent local property tax office and say this: I am a homeowner over 60. I want to know every property tax exemption, senior reduction, freeze, credit, or deferral program that could apply to my property. Please tell me what I already have on file, what I may be missing, the income requirements, and the deadline to apply. Write down the name of the person you speak with. Ask whether the answer can be sent to you in writing or whether there is an official web page where you can verify it. And if the person tells you that you don't qualify, don't immediately assume the conversation is over. Ask why. Is it because of age, income, ownership, the type of property, the filing deadline? Ask whether there is another program that may apply. Sometimes the first program you ask about isn't the right one. The purpose of the conversation is to identify the complete list of programs and then determine which one fits your circumstances. If you are 60 to 64, don't automatically assume that you're too young for every senior-related program. If you're 65 or older, don't assume every benefit is automatic. And if you're 70, 75, or 80, don't assume that because you've owned your home for decades, the county has already applied every exemption available. Your eligibility depends on the actual rules where you live. And now, back to that Social Security card warning. If someone tells you that your card will become invalid next month and demands money or personal information, verify it before doing anything. The SSA says replacement Social Security cards are provided for free, and its official resources explain how to request one when needed. Your safest source is the Social Security Administration itself, not a random caller, social media post, or website asking for payment. One final warning: never confuse a property tax exemption with a property tax deduction on your federal tax return. The IRS explains that state and local real property taxes can generally be deductible for taxpayers who itemize, subject to applicable federal limits and rules. But that doesn't mean the federal government is eliminating your local property tax bill. The program that lowers your property tax assessment is usually administered at the state or local level. So, if you're a senior homeowner, the message isn't "your Social Security card is definitely becoming invalid." The real message is more useful: don't let a frightening headline distract you from the financial benefits you should actually be checking. Verify Social Security information directly with SSA, protect your personal information, and then turn your attention to your property tax record. Check your homestead exemption, check senior exemptions, check assessment freezes, check deferral programs, check credits and rebates, check income-based relief, check deadlines and renewal rules, and check that your property record is accurate. Because the biggest mistake isn't asking the wrong question, it's never asking at all. Your county isn't necessarily going to call you and explain every program you might qualify for. A mortgage company may collect your property taxes, but that doesn't mean the servicer determines whether you're eligible for a local senior exemption. And a Social Security card doesn't automatically give you a property tax exemption. You have to identify the program, verify the requirements, and submit the correct application. If you own your home and you're over 60, take 10 minutes this week and find out exactly what is on your property tax record. You may discover that everything is already correct, and that's valuable information. Or you may discover that there's a program you never knew existed. Either way, you'll be making the decision based on verified information instead of fear, rumors, or a viral headline. And remember this: don't pay someone to fix a social security card problem that doesn't exist. And don't assume you're receiving every property tax benefit simply because you've been paying your bill for years. Verify the social security information through SSA, verify property tax relief through your state and local government, and get the rules in writing whenever possible. If this video helped you understand the difference, share it with another senior homeowner, because one phone call to the right office could be far more valuable than ignoring the question for another year.